Hey, how's it going, everybody? Welcome to another edition of the Swing Trading Newsletter. I hope you guys doing well and having a nice weekend. And let's get straight to it. So, looking at the markets now, we've been basically in a consolidation pattern for our last 2 months. Uh, we were running up in through May, and we had a little pullback, in June, and then since then, all the market's been doing is basically going sideways, right? If you really look at it, we're just going sideways in this rectangle pattern, kind of going up, down, back up again. So, right now we're back up to the top of the range. The question is, are we going to pull back to the bottom of the range, right? Just like what happened over here and continue this consolidation? Or is the market finally built enough steam to cause a breakout and head into the new highs? So, I think the way the market's trading right now, and then what happened on Thursday with a down day turning into a bottoming tail, and the next day we close strong. Looks like the market wants to head back up into all-time highs on the spiders. So that's kind of what it looks like at the moment. And the Nasdaq obviously has already been doing that, right? S&P is still hanging in there. Hasn't touched the new highs yet, but it will slowly play catch up and test the new highs. But you look at the Qs have been just rip roaring into new highs. I mean, this coronavirus decline is a thing of the past. I mean, we are literally much higher than that. Crazy momentum here. However, looking at this monthly chart of the Qs, right? Looking at the monthly chart of the Nasdaq, this can't last. That's the thing. The way this chart is trading, it can't last. It's gonna get a pullback, and it could be a nasty pullback. So, the more the market runs, the higher the chances become of a nasty pullback. So, uh, that's kind of what it looks like. But here's the thing: I don't get that feel when I look at the S&P. When I look at the S&P, I'm like, well, yeah, you're gonna make new highs, and then something is gonna happen, but nothing right now. So S&P looks like it wants to go higher, but the Nasdaq is just really extended. And what's interesting is that through all of this rapid rally, the IWM, the Russell ETF of the small cap sector, has still not been able to get above its 200 MA, right? Despite all this rally. So that's not a good sign because in a good economy, people are more risk tolerant. They want to put their money behind small cap stocks, right? Taking more risk. The fact that the small cap sector is lagging tells me that people are becoming risk averse. They don't want to take the risk. That means they're not confident in the economy, right? They're putting money behind safer investments and safer stocks. And we could kind of look at a glimpse of that if we take a look at the ETF XLU. But in the funny part about all of this is that the XLU rallied way harder than any other sector before that corona decline, right? We got that corona decline, we came back up, and utilities actually surprisingly haven't done anything, right? Usually, what happens is when small cap sector is lagging, people are buying utility stocks, which are safer stocks that should usually go up. But the utility sector hasn't gone up either, which is obviously a sign of concern. And then if you take a look at, let's say, the energy sector, look at the energy sector still hanging around at the lows. So, these are just some signs that make you wary of the market rally, right? Because, I mean, energy's at the lows, utilities are not rallying, small cap stocks aren't rallying either, right? And look at financials. Financials still below the 200, still hanging around at the lows. So even the transport sector, IYT, still below its 200 MA. So, this market rally is, it's a very interesting rally to say the least, because no signs are really suggesting this rally, right? All sectors are weak. Transports, weak. Financials, weak. Small cap, utilities, right? Energy, all those sectors being weak, the market's really rushing. And that's primarily happening because of the NASDAQ, right? The technology stocks have been killing it. I mean, look at Apple, near all-time highs. Look at Microsoft, right? All-time highs. Look at Google, all-time highs. Look at Amazon, all-time highs, right? Shopify, Spotify, Tesla, right? So because of all of these technology stocks, that's why the market is going up, because these stocks are making brand new highs. So a very different world that we're living in. Um, the transition from the service industry to internet industry, and that's kind of where we're at right now in the technology sector. Basically decides where the whole economy and the whole market goes. All right, so that's that. Taking a look at ETFs that we talked about in the previous newsletters, right? We talked about gold, and where we talked about, hey, if gold gets above here, it could be a nice little trade, and it's done a pretty good job if you've been trading gold. I also talked about silver, keeping an eye on that one as a breakout above this blue trend line, and silver got a breakout above here, and has done decent since. So decent little trades if you guys took those. Oil still going sideways, but the longer it goes sideways, the better it becomes. So one of these days, it's going to try and break out as well, and try and maybe make a move to the upside. Natural gas, still weak. There's just no sign of buyers here. I would just not even focus on this one. Leave that alone. All right. So as far as the newsletter, right now we got 3 open trades. We got Sage open, we got GILD open, and we got the PTE open, right? So those are the 3 open trades we have. We closed out CTIC for a profit, and FLDM. We'll talk about it. FLDM also, we got out of it for a small profit, although I'm very disappointed with that because take a look. So FLDM, this was a trade we called in the previous edition of the newsletter. We bought it long right over here, put our stop loss right over there, and boom, popped up. We took half profit at $6. Maybe I should have taken all of it. Took half. I raised my stop, and that in the morning it had a little spike down, which took me out, right, of the half my shares, and then it came right back up again, which is super disappointing. And and look at it on a 1-minute chart. It basically went back up, but it had a little morning spike that was enough to take us out of the trade. But anyways, FLDM, nice little trade we got on that one. We closed out CTIC, which we bought over here above $1.28. Boom, spiked up. We got out half, raised stop on the other half, and then it got taken out. So CTIC was a nice little trade. So we've had pretty good trades recently, right? CTIC, FLDM, and we had that OPK that ripped up and still going. Look at that. When we had it long right over here, OPK was a nice trade. IBIO was a nice trade. So some good stuff there. But right now we're in 3 open trades, so let's go over them. GILD, this is one that I barely got triggered into on this little spike day. I was trying to buy this above this trend line, and it got above that trend line with a gap. Just barely triggered us in, but never went higher. Pulled back, but now it gapped up again. So I'm going to raise my stop loss up a tiny bit. So original stop loss was obviously over here. Now I'm bringing it up under this tail's low, just a tiny bit raising it. But hopefully one of these days it breaks out above this trend line and we can get a move higher. We do have to keep in mind that on 22nd July, we have earnings on GILD, and so we have to get out before that. So we have to keep those things in mind. Okay, the other trade we are in is PTE, which basically has done nothing ever since I got in, like literally nothing. So I've gone ahead and raised my stop loss on this. So original stop loss was obviously down over here. I'm raising it a tiny bit under $1.15. So $1.14 will be the new stop. And I'm hoping one of these days it can get back above $1.40 and we can get some moves. So we'll see. PTE, we're still in that. Next trade that I'm in is Sage, SAGE, which looked really, really good. And but hasn't really still done anything yet. I am gonna go ahead and raise my stop loss. So if you see here in the newsletter, the new stop loss on this one is now 41.52. So 41.52 is a new stop loss. That is basically if I go on a 1-hour chart, on the 1-hour chart, it is below this, basically under this pivot. So 41.52, the new stop on Sage, and those are the positions that we're in at the moment. Let's go over some new trades that I have for you. One of them is BKEP, BKEP, a little thin stock, so be careful on that. But I like this consolidation base that's forming over here. If it gets above that base, I think it could go higher. And the reason I say that is the weekly chart. Look at the weekly, right? Straight down into stage 4 downtrend, going into stage 1, failed breakout, right? Failed breakdown, comes right back up, and you got a beautiful consolidation on the weekly chart. So if it gets above this weekly breakout with a stop loss under here, I think we could get a move to the upside. So that's what I'm looking for on BKEP. That's one trade. Next one is a short idea, SCS, steel case. So this is a short trade under Friday's low right over here, stop loss above there. And I'm looking for a little breakdown to maybe retest these lows right over there. So that's the pattern I'm looking for on SCS. Another thing I liked about that is, it kind of had this little, bear wedge, right? Bear flag, and it broke down under, so playing a continuation of that. So, so that's SCS. A short idea. I am canceling the fun for now, PHUN. Last newsletter we called this one, so I'm going to cancel that for now. Okay. INSG, I'm keeping that valid, but the numbers have been updated slightly, so you might want to check the newsletter. But INSG is still valid. PSTI, same thing. I adjusted just the number slightly, but PSTI is still valid. Okay, so this one I like long. I'm canceling the SNES. So SNES has now been canceled. No longer looking to trade that. I'm still keeping an eye on it though, but the order has been canceled. And let's see. Another one I like is XNet, which we tried playing it long, a few weeks ago. We stopped out on it, but it came right back up again. So I still like it. So the trade, again, check the newsletter numbers, but it's going to be long above these tails. Stop right below here and look for like a little move higher. So reason I like it is the weekly chart, little wedge breakout, and might want to test the moving averages up there. So XNet, definitely want to keep an eye on. All right, so those are the official trades. I do have some ideas that I'm not calling right now, but some ideas. Obviously, the old idea that I gave, I think is still looking nice, that I'm going to keep an eye on. Another one I'm keeping an eye on is AXSM, Axum Therapeutics, as a long above $87. Gets above 87. This one could go higher. SNES, obviously the one that I called last time, that still looks interesting. On the short idea, I've definitely been considering this ULTA, ULTA, and definitely been considering that as a short idea, ULTA under this support. Maybe a 3-bar play on Monday. That does look pretty good. So ULTA is one I'm keeping an eye on as a short idea for you guys. And here's another one, BMRA, Bio America. Looks pretty good if it gets above $9 as a long idea. This looks pretty good. So, there's some good stuff, but I'm being, cautious right now with some of the other things. But again, all these trades that I mentioned, I do really like, and I would call them, but I'm just not too sure about where the market direction right now. Because you can see a lot of the small cap stocks that even we've traded, FLDM, CTIC, they're popping on day ones, but they're not following through, or they're following through, but they're shaking out first before they're following through. So that's kind of the problem. So I think those are the stocks that I'm really looking at, guys. All the other stuff is not that exciting to me at the moment. So I think like this one's interesting. GOL, if it gets above $8, looks interesting, but nothing that I love at the moment. Like even this Hexo I've been watching, penny stock. If it gets above like 85 cents, looks very interesting. I'm watching the Slack, work above 34.50s. So all these are good looking trades. They're definitely on my watch list, but I want to feel more confident about the market before I go ahead and call that. So we're going to stick with the official ones and then the 3 that we're already in. And as far as market internals, let's kind of quickly take a quick glance at it. So yeah, looking at the market internals, very neutral. See that? This is why it's a very tough market to read, because markets chart-wise are looking bullish. But when you look at the sectors are not saying that we're bullish. And then you look at the market internals basically hanging around at the 0 line, right? Which is dead neutral, so which means there's no real bias. Even if let's say I take a look at it on the Qs, here's the interesting part, right? Even when I'm looking at the market internals, the McKellen oscillator on the NASDAQ, which is extended, the McKellen oscillator is still not extended. McKellen oscillator is still neutral. So that means this rally could have much more to go, right? So that means that don't be too short biased, because market could continue, right? Because we're not even in the overbought territory yet. So very interesting market to read. And I think until the election in 2020, in November, the markets are going to be choppy like this. But there's still plenty of money to be made, right? In the day trading room, we had one of our best weeks last week, right? It was a 7-hour plus 8-hour week, personally for me, and then even for Jeff, has a pretty good week. So, day trading has been pretty solid. And even swing, we're having a little back and forth, but at the same time, we're getting trades. We're getting 1 hour here, 2 and a half here, slowly adding to our bottom line. So we're still doing well overall. And again, these are the trades we're waiting for to trigger on this column, and then the open ones that we're in. Please keep in mind the spreadsheet is not updated every single minute, right? It's not a real-time spreadsheet. Somebody's actually got to go in there and update it, right? So usually, we try to do it to end of the day, but every other day it should be updated. All right. So take care. Have a good one, everybody. Hope you have an awesome weekend, and I will see you in the next edition of the Swing Trade newsletter.